Let's look at high yield corporate bonds versus treasuries, right? So junk bonds versus treasury bonds, right? Risk on in the top panel versus risk off in the bottom panel, and then the ratio in the middle. So you can see here, this chart wasn't confirming the new highs we made in the market. But, right, there wasn't a weight of the evidence that said, oh, you need to get out of the market. There's not a ton of stuff that it's just saying maybe not add here, pay attention here. And so seeing this ratio kind of start to crack back down, right, making new lows since May, right? This is the lowest it's been since back in May, so 6-month lows essentially. What we see is that the people are going a little bit more towards safety, and they're kind of erring away from the junk in the bond market. So stock market, right? Let's look at high beta versus low volatility, another risk on, risk off. And until today, this ratio wasn't correcting. And so when you're doing some analysis, what you would say is that the beta was the exception to the rule. When we saw other risk on, risk off ratios starting to correct, beta was the exception. What is the largest component of S&P 500 high beta? Technology. So technology was the exception in the market of things that were still going up, still making new highs. And when technology makes up 33% of the market, it can mask a lot of the weakness that we'll get into under the surface.